We're now being joined by Manish Singh, CFA and CIO at Crossbridge Capital. Thank you for joining us, Manish. Great to have you on
Thank
the
you for
show.
having me.
Thank you and welcome. Now, my first question to you would be, market predictions are now up at 69% from 30% barely a month ago. And this is on the narrative that Fed will cut rates by 50 basis points. Now, what's your reading? Would it be 25 or 50 basis points? And what difference is this going to make?
In my opinion, it is going to be 50 basis point. And the case is very clear for Fed to cut rates, because if we are at a stage where inflation is on path to go at 2% as the trend is, what is the basis of keep being so restrictive? So if you see the Fed fund rate, the lower bound is at 5.25%, upper bound 5.5. Look at where the 2-year rate is. The 2-year US Treasury rate is now at 3.5%. You have to go back to 2008 to see a bigger difference. So difference between the Fed fund rate and the 2-year US Treasury rate is almost 190 basis points. You haven't seen this bigger difference. So the rates are definitely much higher. Now, if you see why I think that there should be 50 basis point rate cut, the jobs reporters are clearly pointing out that the job creation is back to pre-COVID levels. The unemployment rate at this point is higher than what each and every FOMC member predicted it would be at this time of the year or for the end of this year. So the basis is very clear. Rate cut basis is clear, but I believe that it should be a 50 basis point rate cut. Now, my final point, I would say, if you look at the projections, and we are going to get an updated summary of economic projections, SEP, if SEPs say that Fed is going to cut rates, or Fed should cut rates by 100 basis point or more, what's the point of starting with 25 basis point? What will change for them to do 50 basis point later on? Why not start with 50 basis point? So for these reasons, I say that 50 basis point is what we are going to get tomorrow. And I'm not concerned about recession. I don't think US is going into a recession. And this rate cut is going to help the economy, but we are not going into a recession regardless whether it's 25 basis point or 50 basis point rate cut.
Okay, well noted. So no recession and a high probability of a 50 basis point rate cut. So now the Federal Open Market Committee's 2-day meeting begins today. And apart from the rate cuts, obviously, what is the other commentary that you would watch out for? Anything else that you have a keen eye on?
Yeah, I would say the reference to economy. I mean, depends on how many times economy and jobs are referenced in Chairman Powell's post-meeting press conference. That will be very vital, because everyone is looking at that data, where it's going to be. Also, what he says about the building. I mean, let's look at the key thing, which obviously Fed is not going to discuss, is the U.S. election. I mean, what happens in the U.S. election in November will have a bearing on what the Fed policy is going to be. If for a moment, if you think that President Trump is going to win and is going to put the tariff that he says he's going to put on China and other countries, that's not going to help the Fed's cause. Recession will come back, and this is even mildly so, and that suddenly it puts the Fed on a back foot. So what I think the elephant in the room, which will not be discussed, is the U.S. election. And the Fed likes to say that they don't look at election outcome, but at the back of the mind of all FOMC members, including the chairman, it will be that what the plan of action is going to be if President Trump wins and he increases tariff, inflation will rise again. Maybe not to the extent that we saw last year, but inflation will go up, and that will just stall the Fed from any more rate cuts. I don't expect that to be discussed. As I said, politics will not be discussed, and Chairman Powell will stay clear of that. I mean, I hope at some point central bankers do think that they should talk about such things and not stay clear. I know they are independent, but they should talk about such matters and take such questions as well.
Okay, noted. So, Bloomberg recently reported that US August retail sales rose by 0.1% month on month against an estimated decline of 0.2%. Do you think that this could affect the Fed's decision in any way? What kind of influence this could have, if any?
Not really, because when you're making these decisions, you're looking at a few months of data, not just one data. And if you read the FOMC minutes from the July meeting that they had, it was very clear that they were looking to cut rates then. At least there were many committee members who thought that rates should have been cut at that meeting. So the rate cut decision has already been made. which is why you are seeing the probability as high as 65, 70%, at one point got to 70% as well. So that is not going to be a surprise. I don't think that 50 basis points should come as a surprise. But where I think the Fed has to guide the market, and which is what market is going to look at, is that 50 basis points should not be seen as a panicked reaction of anything that's happening in the economy or is about to happen. So the narrative around that is what I think it will be something that market will pick on. But again, I don't look at short-term moves. I think short-term moves always take you in the wrong direction. People have been asking and calling for US recession for last 12 months, 24 months. They have been disappointed. You have to look at the medium-term data. If you see where the consumption numbers are, where the indebtedness of the household in America is, if you look at the mortgage level or what percentage of the equity price in house is made up of mortgage, that's way down, 27% leverage, that's very small. Stock market is at all-time high, house prices are high, so the wealth effect is real, and US is running a deficit of 10%. I mean, those things all add up to spending. So again, as I like to say, I think that I don't see US recession. The grounds are very clear. The equity is going to do well, and Fed narrative is going to be key. But the most important thing, US election, which will not be discussed, but that's the key thing to look out for.
So much for joining us, sir. That's all the time we had, but thank you so much.